Yeah, okay, guys. Good evening, everyone. Welcome to the Forex Trading Mentorship Program. This is like the 12th session. I probably lost count, but it's been so interesting for everyone who's been following and who have been able to attend the classes. Well done. Kudos to you. Okay, so let's get started with it today, guys. Let's get started with it today. Um, Today we are still on module 4. We're going to be looking at trend analysis. We're going to be looking at trend analysis. So that's what we are looking at today. So whether you're joining via Zoom or you're joining on YouTube, I want to say welcome to you. Welcome to you. So let's just get straight into it, right? Let's get straight into it. Um, okay. So yeah, few in the last class on Wednesday, we rounded off on market structure, support and resistance. And remember what we said. We looked at how the support and resistance mark how support and resistance can be identified. Oh my God, market is really dropping today. We looked at how support and resistance can be identified. We looked at how we can um, draw those structures, how you can draw those structure and how you can actually trade those structures. Those were some of the things that we really looked at. Uh, that was yes on Wednesday in the last class. Just give me a minute. Let me do a little bit of certain adjustment. Okay, so we did look at that yesterday in the last class. So we're gonna continue there today. But like I said, today we are looking at trend analysis. How do we identify our trend? Okay. So the first thing I think it's important that I need to tell us, okay, don't forget if you are in the class, let me know you're in the class. Okay, let me know where you're joining the class from. It's very important. So those of us in class, put in your name in the chat box that you are there. Put in your name in the chat box. Okay, let's put in our name in the chat box. Name, so that like I said, I can take your attendance. Okay, so a quick recap of what we have discussed under R and S support. I mean S and R, support and resistance. We told you that support and resistance is those price areas in the market where price actually um, bounces off, in the opposite direction. If I can put it that way to make it very simple. So it does mean that market may be in a position where it's going up, and then, like in this case, market is going up, and then when it got here, it bounced and reversed and started coming down. So the implication is that this area here has, there is a resistance there. And I told you the price usually react when it comes to support and resistance. Price always reacts to, you know previous data, previous area of support and resistance where it has happened before. Price will react in those areas. So when you look at this guy here, and you look at why did he react here, is because previously in this area there was a resistance in this area, and in the future when price came to that area there was a reaction. The same thing with support as well. So anywhere you see a support, look to your left very well. You most likely will see an area in the past where price had reacted. So if you look at this support here, right? Still remember what a support is? That's an area where price bounces off to go by price bounces up. Okay, uh, that's where you have a support. While resistance will be an area where price bounces downward. That will be so. But look at this area, support here, and previously there was a support in this area as well. And look at it. So we have seen in previous time about two times market has actually reacted. Even this area, you can see reaction again. One, two, three times in this same area, price reacted, and you can see that it eventually also reacted there. And okay, so I told us just always mark out those areas where you have a bounce or a change of direction in the in of price, and that's going to be your area of support and resistance. Okay, so if the reversals happens or the change of direction happens in a downward direction, then it's a resistance. If it happens in an upward direction, then it's a support. Okay, so but today, like I said, we're talking about um uh trends. We are looking at trends today. Okay, welcome, Mr. Ayola. Really excited to have you on the call. Quick one. Let me ask you. Quick one. Let me ask you. Have you downloaded? Okay. 1 minute. Have you downloaded? Oh, wait. Are you seeing my screen at all? Have you downloaded the two apps I asked you to download? Please kindly notify me. Let me know. Have you downloaded the two apps I asked you to download? Okay, I guess we're doing great, right? I want to be sure that you can see my screen and my screen is clear. Can you see my screen? Is my screen? Can you see my screen? Oh, oh wait. Mhm. Okay. Mm. So I guess we can move on. Okay. So yeah, I guess so. Okay. Okay. Moment. One moment. Okay, so let's talk about trend today. So, what is trend, or what is a trend? A trend basically is the direction or that price covers over a period of time. Is the direction that price tends towards, or that price goes over a period of time. So there are two key things about this. When you talk about trend, you look at a direction and time. Direction and time. Okay. So today, let's look at let's look at what we have here. Okay. Let's look at what we have here. Let's look at direction. Let's look at time in our analysis today. So from what you are seeing here in my screen, the only thing is I'm trying to be sure that everyone can see the screen. Can you see my screen? Are you seeing my screen? Okay. So okay, let's continue. This place. Uh, that's around May 2023. For example, can we establish identify the trend of price of gold? So between this time, what we know is that what we can stay from the chart is that price of gold has been going up. The trend has been bullish. Okay. And how do we know identify a trend? We look at the series of price movement. Now, don't forget, I told you that price will always move. Price will always move. Price has like the key movement of price is that price has an impulse and then it has a correction, right? Impulse, then it can pull back for a correction, and then the third movement of price is what we call range or sideways movement. So when it comes to trend, the movement of price that creates trends are the impulses and the corrections. So wherever you see price make an impulse and it corrects or it pulls back, it makes another impulse and it pulls back, make another impulse and then it pulls back. That is the movement of price that creates a trend. An impulse, a correction, an impulse, a correction, an impulse, a correction. That's the movement of price that creates a trend. Okay. So, but what establishes a trend is the period, is the time. So, time that, over a period of time, there must be that series of impulse and correction, impulse and correction, impulse and correction. Okay, somebody saying they cannot see my screen. Oh, sorry. Oh, okay. I'm trying to fix this. Just a moment. Okay. Can you see my screen now? Can you confirm that you can see my screen? Can you see my screen now? Can you confirm? Okay, those guys on YouTube can. Okay, the guys on YouTube. What about the guys on Zoom? Okay, those guys on YouTube. Okay, the guys on YouTube. What about the guys on Zoom? So are we good now? So are we good now? So I'm visible now. I think I'm visible now. Okay. So let's continue. So let me quickly go over what just said now. So I said there are three major movements of price. You know, price could either make an impulse move, a correction, an impulse, a correction. Okay, let's so the first movement of price, the first movement that price can possibly make is an impulse. The next one is a correction, while the third one is what you call range or sideways movement. Okay, so when when we are talking about trend, the out of these three movements of prices of a price, the two movement that create a trend is impulse and correction. So the two movements that create a trend in trading are impulse and correction. Okay, when you see a sideways movement, there's usually no established trend. It just means that market is not trending. Market is in a range. It is no you know no 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 um sign. I mean, no direction for both the sellers and the buyers. So but when there is a trend, you will see an impulse in a trading direction, and you will always see a correction in the opposite direction. So let me show you what that means. So if it's a trend, you will have something like this: impulse, correction, bullish impulse, that is a buy impulse, a correction, a buy impulse, a correction, a buy impulse, a correction, a buy impulse. So what this means is that you will see that uh, so you see that let me use this: buy impulse, correction, buy uh, buy impulse, correction, buy impulse, correction, buy impulse, correction, buy impulse, correction, buy ahead. So we can have something like this. Okay. So when you look at it, you see that the buyers, first of all, in the market, the buyers came around and they started buying a lot of goods. So we had this. So the high volume of buyers is what created this impulse movement. And after that, they cannot keep buying. So at the given time, sellers came around and they they started selling just to correct this buyer's move. So a correction move is usually very low compared to the impulse move. So the sellers started selling just to correct this buyer's impulse, and after they sold for a while, the buyers took over again to continue the trend. So buyers started buying again. After they bought on this impulse, they have to correct that move. So sellers corrected, so they started selling off. So when some people buy and price has gone up, they will sell to take profit, right? So some people sold, took profit, okay, but we still have a lot of buyer interest in this currency, because the trend is bullish, is buying. So more buyers came in and pumped in more money after the correction, and then what do you see again? You see buyers volume again, a lot of buyers, and then another impulse, and then after some time, that impulse move has to be corrected by some people who will sell. So some people will take little profit, some people will sell off their position, but because it's a bull market, a lot of buyers are still holding buy sentiment, buy position, so they are still holding it. A few people sold off here, and then we have this correction. Okay, now don't forget, after a correction, more buyers will pump in more money to continue the trend, and so that's why you have another impulse move. Okay, and then as usual, some people will take profit. Some people will take some part of their profit as a result of the growth, the increase in price of gold that they bought. So we keep having this series of up impulse correction, impulse correction, as a result of activity of the buyers and sellers. So when it is so in this example I'm showing you right now, this is what you call a bullish trend or an uptrend, meaning that the trend of the market over a period of time is upward. The trend of the market over a period of time is upward. Okay, that's what it means. Over a period of time, the trend is upward. Okay, so what in another in a, in another language, when you see this, we use to discuss trend, we use what we call, okay, so we have this impulse correction, impulse. So a bullish trend is established by series of highs and lows. Don't forget we talked about high and lows, right? So we have, let's say we have a correction. Okay, so this is a bullish trend. Now, how do we know? Is it just because we can see the shape of this line of ascension? Okay, so look at this. So this shows us that price is going up, right? This shows us that price is going up. So how do we know that it's an uptrend? We are going to have series of high and lows. You're going to have series of highs and lows. Let me quickly type this out. Okay, so we have high, just give me a moment. So we're gonna have series. Just watch this low. Okay, so this is what is gonna you are going to be seeing. Okay, so an uptrend starts with a low. An uptrend starts with a low. So you see low, and then you will see a buy impulse or a bullish impulse that will create to a high. Now, a correction will happen from it's going to correct from a high, okay, and then when you have the next impulse, it's going to create what you call higher low. Now, what do we mean by higher low? Now, when you talk about higher low, you see, look at this high, okay, this what the relation between this high and this low is that this is a low compared to this high. Then the relationship between this low here compared to this low is that this low here is higher than the low downward, right? So that's why we call it higher low. A low, it is a low in relation to this high, but it's a higher low in relation to this low. So this is a higher low. Okay. Then the next thing we are going to see is what we call higher high. So meaning that when you look at this high in relation to this low, it is a high. So this place in relation to this place is higher than this place. So this is a high. Then in relation to this high here, it is also a high. It's a higher high. So that's why we call it higher high. Okay. So this high is higher than this one. This low, this is a low, is lower than this one. So up here, you're gonna just you have all the highs here, all the highs. So these are highs, highs, and then here we have the lows, the lows, the lows, the lows. Okay, so you have the lows downward, you have the highs upward. Okay, so I want you to know that you have the when it's a bullish trend. When it comes to trend, you have the highs up, you have the low downward. So this high is higher than this high. That's why we call it higher high. This low is higher than this low. That's why we call it higher low. Okay. So then we have next an higher low. Then you have next higher high. Then again, you have a higher low. So when you have series of higher high, higher low, it is an uptrend. That means market is going up. That's what it means. When you have series of higher high, higher high, and higher low, it's a series. That series is an uptrend. Okay. So this is an uptrend here. Why? Because you have series of it starts with a low. Don't forget, I said an uptrend. We start with a low to a high, to a higher low, to a higher high, to a higher low, to a higher high, to a higher low, to a higher high, to a higher low. So that's how uptrend is. So when you pick this, what we call trend line. So this is my trend line here. Okay, you can see it. So for me to draw my trend line, I just need to match series of lows together. So I can start, for example, from this particular low, from the first low to the, okay, and then you can see that from I joined this low, this higher low, this higher low, this higher low, and then you can see the market is just going upward. Okay, market is just going upward. So, but imagine that we have something like this. Yeah, something like this. Now, once you have something like this, we say that the trend line has been broken. That means that this trend line has been broken. And what that could signal is that the trend is about to change. But we never know until we see something like this that changes the series of this progression. So we have a low, and markets may come here and give us either a double I here, or something like this. So it comes here, and then it, this is a low, okay, right? This is a you can say big an higher low. But then what do you see? You now see that market comes and breaks this low, and now comes and give you this. So when you see this, it means the trend has changed. It's no longer uptrend. It has changed into what we call a downtrend. So what we call a downtrend, okay? So you could have something like this. So good. Now, so following this situation of series for a downtrend, okay, it starts from a high, a downtrend. Okay, sorry about that. My internet just went out. Went out. Okay. Okay. So as I was saying, so we have this eye here. We have this eye here. And why is this a high? Because it did not, the eye did not break this eye. This eye didn't break this eye. So that's why we have, that's why it is a high. Okay, we call it a high. Now, so but if we continue, we see that this eye, since it did not create, um it did not break this eye. So this one is higher high, this one is high. If it broke this eye, we call it higher high, but now it didn't break it, so it's a high. And then what is a high will produce a low. So what you see here is that we have a low here now. And then the next thing you see that the, and like I told you, on the upper hand we have the highs, and on the lower side we have the lows. Then if you look at the next thing that happens, we have low, then we have what we call lower low, because the low is lower than the previous low. That's why we call it lower low. Okay. So now we have lower low. Why? This low is lower than this previous low. So that's why it's lower low. Then we look at this high. This high also is lower than this previous high. So we call it lower high. Okay, that's the lower high. Then we look at this new low. What's the relation to this previous low? It's a lower low, right? So we call it lower low. And then we, this, the next high is also a lower high. So we bring it, is a lower high. So the next one is a lower low, right? Lower low. And then the next one is lower high. The next one is lower high. So we have a lower high here. So you can see the difference between a downtrend. So when I pick my trend line and I want to draw my trend line, I have something like this. Market is moving from a high through series of lower high. That's the downtrend. Uptrend, look at the series. High to low and low to high, higher low, higher high, higher low, higher high, higher low, higher high. Okay. For a downtrend, we have from high to low, high low, lower high, lower low, lower high, lower low, lower high, lower low. So that is it. Now let me show us how. Sorry, I'm trying. Why is my, sorry guys. Why is this not responding? So my trading view seems to have frozen. It's not responding. Let me just give it a few minutes for it to come up. Okay. Wow. What's happening? Okay. Okay. I think we are back. Okay, so I think we are back. So when we look at these examples that I've cited, this is this is what an uptrend looks like. This is what a downtrend looks like. An uptrend, like I told you, has this series of low to high, higher low, higher high, higher low, higher high. A downtrend has series of high to low, higher high, high to low, higher lower high, lower low, lower high, lower low. Okay, so that now good. But let's talk a little more about this direction of price. For so when you see this, what you see is that for an uptrend to be established, and you price is moving from that higher high to higher low, higher high to higher low. Okay, what you will see consistently is that price keep breaking the high. So we have this high, it was broken. You have this high, it was broken, and then after it broke up, market came back. Okay, and then you see the next high. This is the higher high. It was broken by the next impulse. So and then market went up, and then so what you see in an uptrend is that you will see the price keeps breaking the the okay. So price a bullish impulse breaks the previous high. The bullish impulse keeps breaking the previous high. So you see this first one. This was the first impulse that created this high. Then market pulled back, corrected. I'll be right. So we have this pullback, and then the next impulse broke this high, and then market corrected. Then the next impulse broke this high, then market corrected again, and then the next impulse breaks this high. So that is how you see an uptrend. You keep seeing, this series of um impulse and correction to the upside. So you see that the impulse keeps breaking a previous high to give us a higher high. Impulse keeps breaking the previous to give us a higher high. So, but look at this scenario that market has been giving us this bullish impulse, buy impulse, breaking the previous high and all of that. And then, the market is trending, the market is bullish, the market is going up, the market is an uptrend. And then we see market do something where, like I told you, gives you a low, and then it refuses to break the previous high, and then instead of breaking high, it begins to break lows. Okay, so look at this. So when for the trend, a bullish trend to continue, a previous high is supposed the higher high or the previous high is supposed to be broken. But in this scenario, the high did not break above the previous high. Instead, we realized that it actually closed below the previous high. So what do you have? You now have this high, this new high, we did not break the previous high. And instead, what did we see? It came to a low, and it breaks the low. So this is the low. If you look at all the previous the lows were not broken, right? So this low, so we keep having higher low, higher low, higher low, right? But in this scenario, a shift in momentum, a shift in direction is signified by a break of a low to the downside, and then you most likely either see a a double top or a high that an equal high, or this is an equal high where this high does not break above this, it just gives us the same high, right? Equal high, or it closes it it closes just below the previous high. So now this is a lower low, lower high. This high is lower to this high, okay? But then you can now see a change in the momentum, a change in the impulse. So instead of us having a bullish impulse, then a correction is correction to the downside, a bullish impulse, a bearish correction, okay? Or let me use the term you are familiar with, a buy impulse, then a sell correction. But now we now have, boom, something like a buy correction, and then we have a sell impulse. So a sell impulse, we always break the previous low, right? So this is the previous low that was broken by this sell impulse. And then the next thing you see is that we have a buy correction, and then the next low was broken, so by a new sell impulse. So that means there is a change in the trend. Then we can continue like that. A buy correction, a what? Sell impulse. So you can have something like this. So you keep seeing this low was broken by the sell impulse. So when you see a series of low being broken in the market, it signifies a downtrend. And then when you see series of high being broken, it's gonna most likely indicate a bullish trend. Okay, but like I said, what establishes the trend is the activity of price over a period of time. When you see this movement of impulse correction over a period of time, going in a particular direction, whether upward or downward. If it's going upward, is an uptrend. If it's going downward, then is a downtrend. Okay, let me let's now go to the chart and let's see some example. Oh, great, good. Look at this. This is gold over a period of between December 2015, and let's look at it. And let's see until now, December 2015, and now. So let's look at it together. From here, we see this low, and then it gave us this high. From there, we saw this low. This is a higher low, Abi, and then it gave us this high. But you can see, like I told you, this high did not break the previous high, right? Does it? It didn't break this high before it went and gave us a higher low. But the next move of the market gave us this high that eventually broke the high. So we have this, we have a correction to the downside, and then we have this upward movement, and then we have this correction, right? And then we have this impulse again. We have this correction, and since that time, we have been having, like double top, or what we call equal highs. Okay, so we have been having equal highs. So when you look at this, you see it doesn't look as perfect as the one I drew without the chart, but it doesn't change any fact. We can establish the trend here. So look at it. So we have this low, and then we have this high. So the question here is that which low broke this high? It was not this low. This low here didn't break. This low here didn't break the high. But what broke the high? It was this particular low. Okay. So since it was this low that broke the price, we can do something like this. You will see something that is much neater. So we can you can see this low high. So low, then high, low, then high. Again, I don't know, but let me check this. Again, we have the same equal low here in this case. Now, so the question is, which this low broke this high? So we have this low, higher high, higher low. I mean higher low, higher high. In this series, we have the same low, right? We have equal lows here. So, but again, we have higher high. Then we have higher low. Okay, so let me stop there. So where was the next high after this guy here? The next high after this guy is this guy here. So we have this is the next higher high. So this high also was broken by this low here. So this low here broke this high here and then gave us this high here. So that high there also created this low. So we have this low that equals the previous low, but then we have the next impulse, and with the next impulse it broke this high and gave us another high. So you will see that since that time the uptrend series did not continue. Why? Because market had not broken above this high that was last created by this low. Instead, what did we have? We have a higher low that has not created a higher high. It has not created a higher high. Instead, what do we have? Instead, what we are having is that market keeps creating this series of equal high, and then it has indicated a change in trend. Like I told you, a change in trend. Why? Because after this low was created, right, we expect it to break above this higher high to give us a new higher high, right? So let me quickly do that. This higher high series. Um, just give me a minute. Let me quickly save some of this. Okay. So this is the high here, right? And then we have the low. So we have the low here. And then we have the lower high. If I'm right. We have the lower high. So we have the higher low rather. We have the higher low. So we have the higher low here. And then we have the higher high. Where's the higher high? Here. That guy is there. So this is the higher high here. Then the next thing we know is that we have the higher low, which is here. Then the next thing we know we have is that we have the higher high, which is here. Now, what this higher high created was to create a low, or what you like is equal low. So, but it's still higher low in relation to this guy we are looking at it. Okay, this guy here. So we are looking at this guy here. So it created higher low. Okay. So we have equal lows here. Then this impulse, it broke this higher high and gave us a new one, right? So we have higher high here. And then the next time we saw it, it created a low, a higher low. And now we expect it to break above this and give us a higher high. But it did not break above it. It didn't break above this. No. So what did it do instead? It went, created an equal low. And then what do you see? It broke this low, this higher low. And now, like I told you, when it breaks like this, is a signal, a possible signal that price is going down now. Okay, so you have got the number one signal that price is going down. The trend has changed. Okay, so what do you see next? Price goes up, because price must go up after it breaks this low. It has to go up to change, to create a new series, and then give us this higher equal high. Okay, now from this point, we expect it to come and break this new low, because this, it has to do something like this. It has to now come, break this new low, and then continue in its own, and it has given us this high. Let me show you. We have this high here. It's not a higher high because price didn't break above it. So we have this high, and then we have this low. We have low here. So this is supposed to be lower high. This is supposed to give us a lower high, right? But we don't have, it's supposed to give us a lower high here. But we don't have a lower high. Rather, what we have here is, more like high, equal high, which is okay. So we also call it double top, equal high, so double top. But the next thing we expect it to do now is to come all the way down and give us a lower low. So we expect it to come, give us a lower low, and then continue to go up, then continue to create a lower high, and then lower low, lower high, lower low. And then when it does this, you can see that the direction of the market has changed, the trend has changed. So over a period of time, you're going to see that gold may continue to go down, indicating a change in trend. So, but like I told you from the beginning, the thing that creates trend are in the market, and the movement of price that creates trend in the market are the impulse and the correction. Let's look at another quickly before we wrap up tonight. Let's look at GBP USD. Like I told you, is one of these. This is one of the guys I trade personally. So let me look at it on the daily. Good. See what we are talking about. Can you see the momentum and the impulse from here? So we kept seeing. Okay, let me start from here. Look at this. Our market started from here, high, and then give us a low. Okay, higher high, lower low. I'm sorry, lower high, lower low, 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 lower high, lower low. We have these equal highs here. Okay, and then we'll continue to see this series of until we have this. So finally, eventually we add this, and you can see that it's a downtrend. But something changed because after that time, it went up, gave us a lower high, but it did not give us a lower low. Instead of that, it gave us a low, or what you want to call a higher low. And then the next thing it did is that it broke. If it is a bearish trend, if the downtrend is going to continue, it was not supposed to break this higher low. Okay, and sorry, this lower high, it was not supposed to break this high, previous high here, this lower high. In the downtrend, the highs are not being broken, it's the lows that are being broken by price. But here now it has broken the high, so it's a change of trend. Then we now have high, we have higher low. We have the next thing we had was a higher high. Let me just, and then a lower, a lower high, a higher high, a lower high. We have equal high, equal low, and then it eventually broke and gave us higher high, higher low, higher high, higher low, higher high. Okay, so let's stop there. So look at that. So because from the beginning, from down here, like I told you, if it's a downtrend, lows are being broken. It broke this low. This low was broken. This low was broken, right? This low was broken. So we are looking at the low downtrend. You keep seeing the lows will be broken, not the highs. It is in uptrend that the high gets broken. The impulse movement breaks the highs in an uptrend. The impulse movement breaks the low because the impulse is bearish. So look at it. So all the lows were being broken, but by the time it got to this place, this was the next low. But did price come down to break this low? No, it did not. Rather, price went up, created a high, and then the next thing we saw was that the high was broken. So we now have a change of trend. High broken. Then we have this equal highs. Okay, meaning that this high was not broken, but eventually it broke it here. So this low broke this high. Can you see? So that's the uptrend. I will be in an uptrend. The previous highs will be broken by the impulse move. In a downtrend, the previous low will be broken by the impulse move. So here in this downtrend we are looking at, this is the impulse, this is the correction. Impulse breaking the low, correction. Impulse again breaking the low, correction. Impulse again breaking the low, correction. Impulse again breaking the low, correction. Impulse breaking the low, correction. Impulse breaking the low, correction. So that's what you see in a downtrend. In an uptrend, what do you see? You see impulse, bullish impulse breaking the high. So here we have impulse. Oh, sorry. In an uptrend, buy impulse breaking the low, breaking the high. Buy impulse, it broke the high, correction. Buy impulse, it broke the high, then we have correction. Then buy impulse broke the high and then correction. Another impulse, it broke the high, correction. Buy impulse broke the high, correction. And then look at what has happened again. There's a change of trend. I told you when it's a uptrend, the low are not supposed to be broken. But what happened? We saw market do this. It broke the low. So now that this low has been broken, is a change that a signal a change in the trend. So what do you do? Look at it. What should we expect? So this now represent our impulse or our swing low. Then we are expecting a correction. Then this low should be broken, correction, impulse again. So that is what we are expecting to see on GBP USD. So now we have this, then we should have this. Okay, so we expect a correction of this impulse. We should see a correction, then impulse, a correction, then impulse. Then we know that this uptrend has been exhausted. This is the uptrend there. Then it means you are going to start a new downtrend. And like I told you earlier, you can even see from this my diagram here, from this my graph here, okay, this my trend line has been broken. So it's not only this low, this support. You still remember your support and resistance. This low is a support, okay? It was not only this low or this support that was broken. The trend line that indicates the market is going up has also been broken by this move here. So this is where it was broken here. So you can see here the trend line has been broken by this as it was moving down. So that's another thing showing you that the trend has changed from an uptrend is now changing to a downtrend. So that's the thing about trend analysis. You will always see this series of high and low, whether it is in an uptrend or whether it is in a downtrend. Okay, I'm going to stop at this point and I'm going to take your question if you have any. Don't forget, we are going tomorrow in our next class on Monday, we are going to go over trend again. And it's going to be a shorter class. When we introduce a topic, it's usually longer, but then the follow-up class is going to be shorter. On Monday, we are going to continue to look at this trend. But let me take your question if you have any question. Go ahead, please. If you have any question, go ahead and type in your question. Go ahead and type in your question, please. So I'm waiting to take your question. I'm waiting to take your question. Come on, let's go. Let me know those people who are on the call tonight, please. If you don't mind, let me know those who are on the call tonight. I know Mr. Coyote is on the call. Who are the other people who are on the call tonight? I'm waiting to take your question. Come on, let's go. Let me know those people who are on the call tonight, please. If you don't mind, let me know those who are on the call tonight. I know Mr. Coyote is on the call. So fine. So if there are no questions, I think that's just cool. So guys, that's it for today. This is our 12th class also, or 13th class if I remember very well. We still continue with market structure, module 4 market structure. We have discussed support and resistance. We have discussed trend. So the next When we are done with trend, we'll be going on to look at zones. We'll be talking about zones, okay? And then from there, we are going to look at other modules. I want to thank you, celebrate you for attending the class tonight. I'm going to be seeing you on Monday during in the next class. Have a pleasant night rest. God bless you.